So Apple may just be the crown jewel as far as the Magnificent Seven is concerned. It has a market cap of $2.8 trillion, which is about 17.5 times that of RAL, India's most valued company. So first, let's take a look at the brass tacks about this company. So that should come up in your... Stock is up 22% over 52 weeks. Stock is flat over 6 months, down 5% YTD. It trades at about $180 per share right now. So let's take a look at the valuation figures or the numbers or the metrics that define the stock. The trailing P is 28.17, forward P is 27.78, EV upon revenue is 7.34, an operating margin of 33.76. All these metrics actually put Apple at a very favorable valuation as compared to its peers. If you look at the valuations of these companies among the Magnificent Seven, that is the most expensive stock at this point of time is NVIDIA at 66.28. Apple is fairly valued at about 28.06. Microsoft is 36.67, and even Tesla has actually pared down its valuations to about 46.24 times its PE ratio. So even from the valuation picture, Apple looks pretty lucrative if you want to invest in the stock. Also remember, the company does undergo stock split regularly, so the gains can be accrued over time. But there is a special pain point that Apple has faced over the years, and that's how it is making money. So remember, iPhone sales, the breadwinner for Apple, so to say, the sales have actually plateaued over the last few years. That's because people are holding onto the devices longer as compared to earlier, because the repeat cycle or the replacement cycle has actually gotten longer. So Apple has increasingly over the years moved to bolstering its services business that is centered on the Apple One subscription plan or the iCloud subscription plans. So if you look at their Q1 revenue numbers, we see that the company made a total revenue of $119.58 billion. That was up 2.1%. The product's revenue was almost $100 billion. And the services revenue is about $20 billion. But what we have to see, the problematic part for Apple here is, again, slowing sales of iPhones. And the second is the China challenge, where it's facing some regulatory issues, despite in the greater China region, about 4 out of 6 handsets are still iPhones. What is the revenue picture looking like over the last few fiscals? So if you look at the table, actually Apple has avoided revenue decline for a 5th straight quarter in the October-December period. Remember, Apple follows the October to September fiscal. The holiday period, that's the October-December period, is actually its first quarter, always the quarter where it delivers the highest revenue. So if you see those numbers, year on year, you can see 4 straight quarters of declines, and only 1 in 19 is actually an increase in the last 4 quarters compared to the previous year. So a little bit of positive news as far as revenue is concerned, but Apple in its latest quarterly earnings also said that it's expecting muted earnings going forward. So if you take a look back at what Apple is saying, it has avoided 5 quarters of revenue decline, as what we have said. Sales in Greater China have actually missed estimates by about $3 billion. That is a pain point. Apple wants to offset that by double-digit growth in emerging markets like India, but that is too big a bridge to actually pass through. So in the India angle, about 1 crore iPhones were shipped in 2023. India now accounts for about 4% of iPhone shipments as well as revenue. That as compared to about 5 years ago, in 2017, it was about only 1% of total shipments as well as revenue for that company. Now, what does Apple look like going ahead? First of all, it's a conservative guidance for January-March. Services revenue is key to valuations of this company. This is the place where actually Apple can make money, when iPhone sales are actually slowing down and the China market is also not showing enough growth, so to speak. In this quarter, that's the January-March quarter, the company has also pulled its Apple Watch Ultra from the US markets because of a patent issue, though the device is back into the market. During the quarter, Apple also launched its Vision Pro augmented reality glasses, which comes in at $3,500 a piece. But even if the company manages to sell 1 million of these, it's still going to add only about $3 billion to its annual revenue. Again, a minuscule amount given the larger picture of things. So What else we can look forward to? Tim Cook in the earnings had said about AI. Finally, the company has talked about AI, where we can anticipate the next iOS or the next mobile operating system to be powered by AI. So AI is something that the company has steadfastly avoided so far. This is the first time Tim Cook has said. Also remember, today's news, Apple has quashed its plans to make an electric car, and instead the entire team from the electric car development team will actually move to the generative AI team. So essentially, we can say that Apple is doubling down on that front as well. So we may see an iOS device, iOS that is powered by AI. But Apple has still differing views. So Dan Ives of Wedbush Securities, after the earnings, had said that this is the start of a renaissance of Apple's growth. Services growth is key to valuations, and AI-powered iOS 18 can bring about a much-awaited refresh cycle. A contrarian view was by Anurag Rana of Bloomberg Intelligence, where he said Apple's Q1 print indicated very little growth this year. The Vision Pro is not the needle mover in terms of sales. The big factor is China, where we see nothing but disappointment. So these opposing views there. But you also have to remember, as far as investors is concerned, how much are you willing to pay for a stock that may grow at just about 5% this year? But again, you have to remember that Berkshire Hathaway, perhaps led by perhaps the most famous investor in the world, has about 50% of its holdings in Apple stock. So it's something. It is not the flavor at this point of time, Apple, so to speak, because of the muted growth, but it is sort of an evergreen stock in the tech space.